Welcome back to Be the Trader, everyone. Today I have a very, very special guest. His name is Mark Croock. And if you don't know who Mark Croock is, you're about to find out today. And just to give you a little insight, I didn't meet him personally, but I actually followed Mark Croock back in 2000. I think it was in 2017, somewhere around there. And really got a lot of benefit from watching Mark Croock in chat rooms or just messages on Twitter. So he provides a lot of value, and the focus back then was stocks, and now he'll share with you where he's at today. But Mark, welcome to the show, my man. I appreciate you being here.
Thanks, Alex. Appreciate it, and love your show, man. Excited to be here. Thanks for having me.
For sure, my friend. For sure, I appreciate you saying you love the show. I'm curious, if you can give some people who don't know who you are, can you give them some idea of what's got you started in trading, and then we can take it from there.
Yeah, so I actually started back in 2010. Hard to believe it's over a decade since I started, and it seems like it was yesterday. But, I always loved, kind of had a passion for stocks, in college and even before. But never ever thought, I would get into day trading. Didn't really even know what it is, if you could believe it. And, I did the accounting route or whatever and hated it and never really thought I would stay in it, and thank God I got out of it. Came across Tim Sykes videos and stuff back in 2010, and kind of similar to Grittani. I was watching his episode with you just I guess a few weeks back, and similar kind of thing. But I decided that I was going to give it a shot, and luckily, I didn't really have to worry about making ends meet and things like that, because I saved up from working and whatever. But yeah, so I got into it, and loved the promotions and the OTC stuff, and kind of started from there, and then branched out. It's been quite the journey, but it's exciting to move to, I guess, to grow and of course, trade from wherever. And here I am in Florida after, so many years. So it's exciting.
Awesome. And some people who may not know, you've been focusing on stocks for the majority of your career at first. And now you're dipping into options, and you've been doing options now and starting to teach people on that. And we're going to get into that in a minute. But I'm curious to start with stocks. When you were starting in stocks,
sure.
And what helped you personally? Because if you were mainly long bias, right? If I remember correctly, or were you kind of just both?
No, so I actually was more short bias. I love the idea of shorting, and I did have a little bit bigger of I wasn't starting with a tiny account when I first started. So I was actually really intrigued with shorting when I first started. The first red day pattern and stuff like that. So that's kind of how I started, and then I was buying, but I was never quite as good. Somehow, the leg down was always easier than the leg up. And
yes.
It was always my kind of my go-to play was shorting. And I think until today, I'm still more short biased, but I've adapted along the way and learned to buy some of these plays, and especially when hot sectors come around, and we've had a huge amount of that, I think exponential amount of that this year. So in fact, I think I've probably, I haven't actually done the math in terms of what, longs versus shorts. Of course, now I'm in options, and technically everything's long in options, right? Because you're buying, I only buy calls and I buy puts. So it kind of feels like I'm just buying, a lot of the time now, but, I think as far as the stocks go, there's a great trader, I think, can take opportunity of both ways. And that's something that I kind of developed and worked on for so long. And I felt like, I finally kind of, grasped it pretty well, buying, because like I said, I was more of a short biased trader until, probably a few years ago.
Okay, and so that's my misunderstanding. For some reason, I thought you were mainly long bias, but I guess it
Well, I
was
was definitely
short.
buying more recently. So maybe, yeah, since you found me, I think at that point had already, yeah, in 2017, 2018, was definitely buying more. So maybe you saw some videos or chats there where I was, buying or whatever. So,
So what I want to know is you briefly mentioned like when you first started trading, you saved up money and you started to trade on your own. Did you just leave your job without knowing trading and then jumping in, or like how did that happen?
right. So I was actually, still working as a general accountant. And I knew, I definitely kind of dabbled, and I had already signed up for some, I guess it was Sykes subscription program, and just kind of dabbling a little bit, but I wasn't, actively trading. I mean, I think it's very tough to do actively trade, especially if you're at a full-time job. So, but I was, like I said, I was in a position where I knew that, even I was not enjoying what I did. So to me, the risk reward was fantastic, to just, let go of what I was doing full time, and then just try and give it my full effort and full attention. Um, so yeah, I mean, it definitely took time,
So,
but I kind of, like I said, I didn't, really trade on a very consistent basis before, leaving my full-time job.
whenever you did leave, how long did it take you to grasp things yourself and get kind of that consistency under your belt?
Oh yeah. I mean, it definitely took, well, I would say well over a year. Even the first few years, I feel like my journey is rather slow and steady, as opposed to, a lot of other, traders that probably, um, that are well known, obviously. And in fact, I was watching Ducks and Gritani and some of these other guys who seem to pick it up, I think, a lot quicker. Maybe they're, younger. I was already, I guess, late 20s, early 30s. Well, yeah, late when I started. So, um, it took some time, and I feel like not until year 4, year 5, did I really start, getting a good feel for it, and that's when I started getting into teaching, and um, uh, obviously growing my account as well, and just, also looking for other strategies. I mean, not just, limiting myself to just OTC, or, just to $3 and under NASDAQs. And so, and that took plenty of time to kind of adapt, and ultimately, little did I know, get into options, which, I don't actively trade, but I certainly, apply some of the basic strategies, and it's been really good. So, but it's been a long process. And so, I'm very thankful that, that I gave it as much time as I did, because, it really does take time.
What do you feel like? Because there's probably people listening to this, and I'm probably one of those people too, where it's taken me quite some time, a lot longer, kind of like you, where to find your bearings, to find your consistency. What was it for you that either was A, holding you back, or B, that helped you push forward
Yeah.
to get that consistency in year 3 or 4?
Right. I mean, I think, a lot of it was, just position management, and, giving back. I found myself, my earlier part of my career, just giving back after big wins. And, um, I'm not a heavy hit. I'm not a heavy slugger. I don't have a huge appetite for risk. And, so, but when I do, get pretty aggressive on ideal setups, I push it a little bit, and it's great to have big wins. But then I would find that, I tend to give up a lot of my profits and get, kind of loosey goosey. Also always compare trading to sports, and I watch a lot of basketball, and, teams, like, let's say in the playoffs, you're up a big lead, and you watch a team give up a 20-point lead in the fourth quarter, and end up losing. So I could really relate to that, because I find myself, getting too comfortable, getting too speculative, when after big trades, after good trades. So I found myself really susceptible to that, kind of, situation whenever, I'm excited about a big win. And so the emotions are obviously a big part of all of this. And you just really have to treat each day as its own, and you're only as good as your next trade, as they say. So, I feel like that, was to me the biggest thing that stood out. And I feel like these last few years, I've really managed to just overcome those emotions, and just kind of stay steady, and wait for the next play.
So is it kind of something like you've been mainly focused on that has really helped you grow, is seeing your weaknesses and planning for those weaknesses?
Right. Yeah. I mean, absolutely. Identifying mistakes, and, just being very meticulous, and not, I think that's the biggest thing that most traders, new traders especially, they don't recognize their mistakes. And, apart from we all have the psychology and the emotions and all of that, but if you don't recognize the ideal plays, and just eliminate what you're doing wrong, whether it's the time of day, whether it's just a setup that's not that volatile. I mean, it's so important to eliminate the noise, and I really try and not to trade too much. I mean, I've definitely been trading every day, it feels like, this entire pandemic, because it's been so busy. But I think that sometimes you just got to step away, and especially when things have been fantastic, it's good to sit back, and I'm actually trying to do that right now, and that's why I kind of scheduled this podcast during market hours. I like to, that's something that Tim Sykes is always kind of alluded to, and I think that's an important thing, is just to remember that you don't need to be trading all day long. I mean, and the more you trade, the more you lose. So, or at least the more you try force things, right, and then dig yourself out of mistakes that inevitably come. So that's, that mentality is really important.
So you mentioned something earlier too about, you mentioned ideal plays. How did you determine what your ideal play was, and what did you just kind of like learn it from someone, or did you kind of track something? Like, what was your process? Say, this is my ideal play, and this is what I should do. And did you only stick to that?
Yeah, I mean, I think since day one, since I started trading, I was always, like I said earlier, very keen on shorting, and a first red day pattern is really the go-to play that I've always loved. I mean, that one, and of course buying a multi-day breakout, which I think I've only really gotten good at, or better at, in the last few years. But yeah, I mean, momentum shifts in a pattern. I mean, you don't want to be messing around, mid-range on these stocks typically. waiting for reversals and and then buying, of course, the breakouts, I think are your two main, or my two main go-to plays. And there's nothing, it's nothing, there's no secret really. I mean, it's pretty clear cut. It's just a matter of trying not to get, pulled in too early on the short side, of course, and into a failed breakout if you're buying. So, but those strategies have worked so well. And that's what, I'm really excited about, is applying those strategies to options. And now the service that I run there at Evolve Trader, it's pretty amazing if you apply a first red day to an Apple and a Tesla and a Zoom, or buy a clean breakout on like a Beyond Meat or some of these IPOs that have had incredible volume. The patterns are very similar to penny stocks, and obviously they're more choppy, and you're not going to get the percentage gain on the stock itself, but the options are unbelievably volatile, and so just taking the foundation of what I learned early on, and applying that to the Teslas and the Zooms and the Apples, which have been a huge part of my gains this year, that to me is kind of really solidified my I think my presence in trading, or as and just given me confidence to really apply everything that I've learned, to these large cap stocks. Little did I know that, typically we think, well, excuse me, that, small caps and promoted stocks and of course, all these COVID stocks, for example, are, easier to trade and so on. But if you really sit down and look at the basic pattern on some of these volatile plays, Tesla went full supernova, for the way it trades, for the way it traded back in, 2015 through 2018, 2019, and to the way it trades now. That it's pretty incredible the way the strategy can work, and that's so important to just take the foundation and apply it to these large caps, which has worked well. And I still trade, of course, the small caps. Don't get me wrong, but a lot of times there's nothing to trade with the small caps. It slows down, and I see people in the chat room and they're trying to force trades. I'm like, what, you're missing out on some big ass plays with Apple and Tesla, man. I had a $50,000 or $60,000 win on Zoom, Zoom video, I think it was, a couple of weeks ago, and like $50K win on Apple. And the patterns work. They really do. The first red day works. But you really just have to, the timing is everything. And that's kind of what I've worked hard to really to get it, my trading in sync with in the options world, obviously.
So in the options world, so talking about your Evolve Trader, which is a great name, by the way, because that's you evolved, and now you take what you learned and now you're in options, and you've started to evolve that to find really your niche. Like now you're starting to see your stride, if you will, in your own trading, which is awesome to hear, man. So congratulations there. Yeah, for sure. And I'm very curious, because you mentioned you took this strategies that you learned, your foundation, and then you took it applied it into options with these big caps like Zoom, Tesla, Apple that you mentioned. And you said they're similar, but there's obviously the timing is maybe different, or you got to adjust to. Can you explain what you mean by that in terms of the patterns are similar, but the timing is different? Can you explain that?
Yeah, I mean, I think that there's a lot of fake outs. What would appear to be a potential first red day or a potential breakout might just be a fake out or whatever. But I think these large caps tend to, as I said, they're very choppy, and they take time to play out. And I think they require even more patience. You're not going to see a play, typically in small cap world, you're going to see a stock breakout, clear cut breakout, run 2-3 days and then reverse and have a big drawdown or whatever. And of course the bounce and so on. But with these large caps, they tend to, take time to play out, and you'll see a lot more sideways price action. There are a lot more, the exposure to the overall markets it has a lot more, can't think of the word right now, but there's just a lot more patience required, I think. But ultimately, if the volatility is there on the stock, and you can get a 3, 4, 5, 10%, all the way up to a 10% move. I mean, you can get a 600 to 700% move in the underlying options, or if not more. So, but it does take more patience. I think it requires more tape reading with the level 2, and as I said, I mean, the patterns are slower to play out. They're not as volatile, but in the grand scheme of thing, if you're looking at these patterns, and I actually always refer back to Tim Sykes' penny stocking framework, which I always loved. You have the 7-step framework, which is my favorite DVD that he did, and kind of see every play in that light. Then it starts to really, open up. It starts to be more clear in terms of anticipating what's about to come based on the price action. So options they're not easy, but they're fairly predictable when the underlying stock gets volatile.
And so, like, someone listening to this, can you explain to them, like, why would they want to go from trading stock, like penny stocks, small caps, to look into options? Like, is it good for a small account, do you think? Like, what's your opinion on that? Like, versus, like, if you're a small account, would you prefer starting here or here? Like, just curious.
Right. Yeah, no, that's a great question, Alex. So I know I always tell, a lot of students approach me and they're like, well, should I start now? Because they're still new. And I say, no, I think you need to learn the basic patterns and understand, all the basics, the foundation of what a volatile setup is, what a volatile stock is. And there's nothing better to learn from than a volatile penny stock that goes, supernova, like a Kodak or any of these COVID plays that went nuts. So I think that's still the place to start. But, as you get more comfortable, and that can be different from one trader to the next. But I think anybody that's been around for a few years should be trading some options on volatile setups like a Tesla or a Zoom or Beyond Meat. I mean, I think I'm up roughly, I think it's close to 600,000 just on options this year. So, and it's actually been, and I'm closer to or I am over 7 figures this year. Thanks to such a volatile market. And, I still say you've got to focus on the bread and butter. Don't get me wrong. I'm buying a breakout on a hot sector play. Right now, all these battery stocks are going nuts. I didn't actually buy any of them, like CBAT and WWR going nuts. I see it's dropping. WWR, it's probably going to go red, but that's the bread and butter. But when the markets are turning, and of course we're in such a overextended market right now that one always thinks that the top's in, and then suddenly we're bouncing back towards the highs. But it's such an opportunity, I think, to have another. I call it like just having another tool in your belt, right?
Would you say that options gives you more high frequency of plays in terms of the amount of plays possible compared to small caps? Small caps will go through like a dry, like September was like a dry spell, it's like, do you feel like the big caps when it comes to options, you're more active in terms of maybe you'll see, one play at least a day versus small caps? What are your thoughts there?
Yeah, not necessarily, but I think there's huge opportunity because, when the markets turned in September, of course, September is historically a red month, so it doesn't. It's not all that surprising, of course, that the market slowed down with small caps, but there was a huge opportunity. I mean, the markets went red. You had Tesla crashing from 500 down to 350. You had Apple dropping from 130 down to the low 100s. And Zoom, of course, dropped last week from 520 to 450, 460. So, I'm not saying there's going to be one of those every day. And my service, we don't market that there will be a play every day. In fact, we say more like 2 to 4 a month, but it's been more like 2 to 4 a week. And, if you can nail a few of those a month, wow, you're gonna grow a small account. And you mentioned that earlier. I think options are fantastic, for a small account. If for students who are very once they're comfortable with the patterns and of course understanding the basics, the foundation of what options are all about, on top of the basic patterns that we look for. But if you're used to the volatility, there's massive opportunity in the options world when you have these pivot points, key reversals in the market, or even a breakout. I mean, I missed plug yesterday. Plug was a solid breakout. Just happened too soon. I didn't pull the trigger. It's lower price stock, but $15 stock, but it still could have been a fantastic options winner. And there's just a lot of opportunity, and especially again going back to small accounts, you can't trade these $100, $200, $300 stocks. But when you buy a $1 or $2, $3 option, I mean, you can double your money pretty quickly in a volatile market. So that works well for small.
So it makes it more feasible for a smaller account to purchase these big cap stocks when going through the options route.
Oh yeah. I mean, and I don't even really trade this. I don't trade the stock. I've got a 7-figure account. I'm not trading, Apple, Zoom, or Tesla stock. I just want to trade the volatility and now of course teach traders that are trading these smaller accounts how to do it and do it in a conservative way. Look, I'm not a gunslinger. I don't have these huge stop losses and huge, and I hear about traders that have max. I think actually you said you have like a max loss per day. I mean, I definitely, I don't like to lose more than 15 or 20K tops in a day, but I'm pretty conservative. So with these options, you can lose. You might lose, let's say 30% on a trade, but you could, risk $300 or $400. But on the flip side, if it's going the way you think it is, you can make, 4 to 5 times that, even more. So, that's kind of how I view, options has become a very important tool, so to speak, in my trading belt. And I just think that as long as the volatility is there, that is something that every trader should consider, because again, when the setups align and you can get a few of these a month, it's a game changer. And I'm, I think we're seeing it already with quite a few students who've done nicely. And since we launched back in June, the Evolve Trader service. So that's my plug for the service. I won't.
No, you're fine. You're fine. No, let me ask you this, Mark. Before we wrap this up, I'm very curious if you could give a new trader out there who maybe they're listening to you and maybe they met you a long time ago, right? Maybe they saw you in Tim Sykes' room when you used to teach trading just regular stocks. And maybe
I still do. Just
okay.
Yeah,
Gotcha.
Yeah, I still do the don't get me wrong. I'm not doing options full time. I'm not saying Lucci, only options out there. But yeah.
Well, what I was trying to say is like, if there's some trader who's like, man, like I'm not losing money anymore, but I'm not really making money. I'm just like treading. What would you tell that trader if you could give any advice? Maybe what they should look at, maybe what they should concentrate on, maybe what they should eliminate. Just any idea?
Yeah, I think the easiest thing to do is to just go through your trades meticulously and look to see what what you're doing right, what you're losing on. And, we all going to have winners, right? Every trader is going to have winners. You get excited and feel like this is the greatest job in the world. But naturally, all the losers come. And unfortunately, most traders are not identifying what they're doing wrong. And a lot of the times it's just bad, setups that are not playable. Most setups are not tradable. Okay. And so, if you have that mentality that the vast majority of setups are not tradable, of course you can scalp all day long, in this volatile market. But, I think if you're identifying plays that just don't have that good risk reward, and that are in your, that you incorrectly traded or that you're losing on, don't get me wrong. Some people are good at scalping and that's great. I'm definitely not, great in that way. I need, plenty of room for a move up or a move down and just take a piece of it. And when you identify plays that are not tradable on your spreadsheet or whatever you're tracking, then you're going to realize that you need to stop trading, too frequently, or at least just focus more on what you've, it's like opportunity cost. I mean, if you're not focusing on the right plays. So I think that's typically the biggest thing for most traders. They don't know what to focus on first and foremost. And that's what I teach. I do a webinar every week for challenge students with Sykes and stuff like that. So, I sound like I feel like I'm a broken record because I end up saying the same things over and over. But people need to hear it. People need to hear it. That's
so true, though.
Yeah.
It's I like what you said, and you said opportunity cost. And if you miss that, what Mark just said, you need to go rewatch this or re-listen. But he's so true on this. Like, if you don't know, number one, like you said a couple of things. If you don't know what you're making mistakes on, if you're not analyzing your trades, then that's one mistake right there. You need to analyze your trades, see what you're making mistakes on. But then number two, you need to concentrate on what you're good at, because if you start to trade all these other trades, then you might miss the A+ setup that you're good at. And so you're going to lose. That's even costing you more money than trading something that's just, half-ass or whatever it may be. But I appreciate you sharing that, because that was some good insight, and I love opportunity. I just love thinking the word opportunity cost a lot, because it's something a lot of people don't talk about, and it's something that, it's painful, especially for you and I as a trader. Like once you're like, you found what you're good at, and then you just kind of go this way and you miss your best setup. That's like the most frustrating thing in the world. And so I completely agree with you. Let me ask you this, Mark. So before we end this, are you ready for the closing bell round?
Let's do it.
All right, my friend. So let me ask you this. What is your favorite book that helped you in trading? And it doesn't have to be a trading book specifically.
So I always loved Reminiscence of a Stock Operator. I'm not a big reader, by the way, so I never been a big fan of books just in general, but I definitely picked up quite a few of them when I first started. And that one, I probably should read it, again, because I couldn't even, tell you the full storyline, but I loved it.
It's a great book.
I felt like it's just something that every trader has to read before they start, and psychology of trading, and a few others. But like I said, I'm not a huge reader, but that would be the one.
Cool, man. What's your best trading memory?
Best trading memory. Gosh, I want to. Yeah, it was probably last year. Beyond Meat, it was such a volatile stock. I don't know if you watched it much, but I mean, to me, it was a penny stock the way it traded, and the IPO, was very manipulated, and that's why I traded like a penny stock, and it had some unbelievable breakouts, and I found myself trading it. I think. I wasn't trading it in the 40, 50, 60 range. I was trading it, like higher up, like in the 150 range. And it just started breaking out and, pulling back a little bit. And I thought that 200, it had 200 written all over it. And I started buying I was doing the options on it, and I bought some, I believe it was a $200 call. And I think the stock was at 170 the prior day. And I knew that it was, this thing was going full supernova. So it was risky, but I knew that it was probably pretty good odds. And it gapped up in the after hours, the 185s, 190s. And then the next morning, it literally touched 200 right at the bell. And I got out, I think it's 300 or 400% win. I think it was a neighborhood of like 35, 40 grand. And then I only risked like maybe 10 or 12. And I don't know. I just, that one sticks with me. I mean, it ranks up there, I would say, as my top one.
Awesome, man.
For recent memory anyways.
So what would your name one aha moment in your trading career?
Aha moment. Let's come back to that one.
Yeah, no problem. What if you had to start over with a small account, what would you focus on?
So I would just, I would love to just be under the PDT, believe it or not, because it would keep me super disciplined. And I would, it obviously depends on the market, but I would focus on buying these breakouts and doing some options too on some of these volatile names that have clear cut breakouts. I mean, the same way that they're same way as penny stocks, break out, focusing on some of these optionable plays that have weekly, especially those that have the weeklies. I feel like having that in the tool belt, is something that I would consider, if I was trading a small account again.
Great. And last one, before I give you an opportunity to share with others how they can find you and so forth. What's your favorite indicator, if you have one?
Favorite indicator? I think just red, green, red. If a stock is, holding its, and I always talk about initial gains on a big spiker. Is a stock holding its gains on initial spiker? And I guess that could be an indicator, right? Yeah. Most penny stocks, as I tell, the students, most penny stocks are one-day failed spikers, right? And that's why most of the big traders are shorting them, right? That's no secret to that strategy. Most penny stocks are one-day failed spikers. Now there are multi-day spikers, which are the best to focus on. But as far as an indicator, is that big percent gainer, because most small accounts are focusing on these buys, and you got to ask yourself, is this big percent gainer holding its gains? Is it consolidating and holding its initial gains for a good hour, 2 hours, 3 hours, ideally into the afternoon, and then it explodes higher? I actually call it the gun chart, where you have
Okay.
where you have the handle and the barrel, right? So, it's so important to look at that and see, is a stock actually holding its gains after, I'm looking at OPTT right now. It's going up to 240. It just took out the day high. So, that's a stock that just held its gains. I probably, I don't know if I would have chased it because it's up, 80% on the day, but if nothing else from this podcast, take that away.
Yeah, that's a great tip, by the way. I appreciate you sharing that.
You gotta focus on plays that prove themselves. If you're going to buy these, and I think a lot of people watching are probably growing a small account, and you got to focus on stocks that can consolidate their gains.
Good tip. And today is October 6th, 2020, for those who want to look up some of these tickers that Mark just keeps on naming because he can't get away from his screens.
Yeah, sorry about that.
It's all good. But anyway, what's one way if people want to learn more about you, Mark, want to get information, where can they find you?
So they can find me on Twitter, The Honest Croock, Croock at the end. So I have a ton of imposters now, so that's kind of frustrating. But yeah, Twitter, The Honest Croock, and evolvetrader.com is where my service is. And, I'm happy to answer DMs and I love what I do. And I'm so excited to help people and see, new traders come through the woodworks. And it's a great time to be a trader, that's for sure. So,
absolutely. Well, look, Mark, I appreciate you being here today, man, and sharing some insight and where you've been and where you're at today. So it was a pleasure talking to you, my friend.
I appreciate it, man. Thanks so much for having me. I'd love to do it again soon.
Of course. Hey guys, I just want to take a moment to share with you some awesome news. I just started a newsletter, and you're probably like, what's so awesome about that? Well, it's not your typical newsletter, because I'm going to give back to you, the people who subscribe to the newsletter. Number one, you will be getting updates on my YouTube exclusive videos, the podcast episodes, and articles and blogs all about trading. But how is it different? I'm going to give back to you guys. I'm going to select randomly different subscribers who are in the newsletter and give them either the opportunity to have a one-on-one call with me. Maybe I'll give them a free trading book, one of my favorite trading books, just to name one, Trading in the Zone. And also, and not only, because there's many, many more ideas that we're going to be doing and implementing. But another idea is maybe win the Billions box set. There's a popular show on Showtime, Billions. If you don't know about it, definitely look it up, because it should be everyone's favorite show if you're a trader. At least it's one of my favorites. So I want to give back to you guys because you guys mean a lot to me. And I just don't want to only provide content, but I want to say thank you, right? And I provide content by saying thank you, but I also want to say thank you by giving back. So thank you guys, and you guys take care.